Market Technicals morning call video for Friday, May 31st. Markets did have a green day. Dow up 21, Nasdaq up 23, S&P up 6, and the Russell up 7. We did get that little bit of an oversold bounce from the McClellan Oscillator stating that we are in oversold territory, so look for a bounce at any time. Sure enough, markets did follow through yesterday with a little bit of a bounce. That bounce was, I would put that as a dead cat bounce. Very quiet. Actually, the week has been very quiet. I'll show that to you in the charts. We've just been kind of meandering around at these upper end of the range. Really sloppy, pricey, real sloppy price action in the marketplace, which tells me that we are probably going to be due for a larger move, and I think that larger move would be to the downside. I think that a topping process is happening. We are looking for a tradable top. I'm not going to say that right now that we have a top in place. I need a little bit more evidence. I think 1635 on a closing basis is going to really do it in the S&P. But again, we did take out the 1650, and we've been down here for a couple of days. So the 1635 is really going to be the key areas to watch today. Now, today is window dressing day, right? It's the end of the month. A lot of funds, they alter their portfolio. They're either going to take profits or they're going to start defending their positions. Now, the S&P, the minis are down 11 handles tonight. So, again, the market has no memory. We're up one day, we're down the next. We're up one day, we're down next. Again, hinting volatility, hinting of a market top. So we're going to watch and see what happens today. Today's going to be very interesting. Might set the tone in for next week. Now, we do have a lot of pre-market economic data coming out this morning around 8:30, CPI. A lot of stuff coming out. So that's going to definitely push the markets or sway the markets one way or the other. So just really keep that in mind. If you're flat, fantastic, like I am. If you're long, you might want to be ready or have some sort of a tradable plan to either take your positions off, defend them, or again tighten your stops. Okay, so let's get right into the charts here. We have the NYMO, which we closed outside that Bollinger Band, as I mentioned yesterday, giving us an oversold condition. Sure enough, we did bounce. Now, that if we hold true this morning and into the day, if we were just closing today down 11, would probably put us in deeper in oversold territory, which I would be looking for some sort of another bounce. I would have liked to see this dead cat bounce work up into the 40, 30, even into the 20 area. Give me that little neutral zone between negative 20 and positive 20 here, where we traded pretty much most of 2013. Now, but we'll see. Again, we could stay oversold for quite some time, and that's something that we're going to continue to monitor. Now, I showed you the Nikkei yesterday and saying that we didn't get the previous night closed because obviously end of day. And Nikkei got crushed again last night, and this is telling us risk off. So until the Nikkei or the yen actually reverses, right, stronger yen, we have lower equity prices, and that's case in point with the Nikkei versus the yen. So we should be, if we do start to really break down here and flush, then the yen would really rise hard, and I think we would get that equity sell-off in U.S. markets here. But again, we'll take it one step at a time. But as you can see here, guys, you notice that one candle down wiped off about 2 weeks worth of trading, and then another candle down wiped off another 4 or 5 days worth of trading. So you have 1, 2, 3, really 2 big down candles, took out pretty much most of all of May. And now we're into April. So you can see fear is greater than greed. So, again, you might want to, if you are holding positions, this could be something bigger than what we expect. Remember, Bernanke's thinking about tightening up the reins of his asset purchase program in June. We are going into June tomorrow. So, let's see what happens here. But if I was long and he was staying that, I would definitely be taking some money off the table if I was long from the beginning of 2013 or the end of 2012 for that matter. Okay, so now take a look at the euro. We have this big head and shoulders pattern, euro neckline here. We did have a big bounce in euro. Again, risk on, euro goes higher, dollar goes lower. Risk off, euro goes lower, dollar goes higher. So right now that relationship still stays in effect. So we'll just keep an eye on this. Again, this is going to take a little time. We're at 130. You got 2 big figures here before we break below 128. So, 2.5 big figures. So that's a real big move. So that's going to take a little time. But just, again, not every day, but something to keep an eye on. I just wanted to show you the relationship really is still intact here. Take a look at copper. Copper is giving me a small little pennant here after this big, large move. So When I see a pennant, that means that energy is building, right? So we get these large price actions, and then we start getting tighter and tighter and tighter. Once we get into the apex, we're going to break out one way or the other. And usually, when we get down to this area, you down to bond process, you probably will break to the upside. Now, copper has been unusually different trading pattern that I've been seeing. So anything can happen. We could break back lower and take out these lows. So this is going to be interesting in the coming days and weeks. What we're going to see what happens with copper if we break out of this symmetrical triangle pennant, if you will. Okay, take a look at China, and this doesn't seem like any big recovery to me. And again, I keep saying that China will be the canary in the coal mine for phase 3 of this market correction. And right now, it really hasn't happened. But you could see that obviously there's somebody realizing that China really isn't recovering as fast or as quickly as they like, and markets are actually being held down here. And same thing with the emerging markets. Very similar chart. You can see, let me just open that up for you guys. And as you can see here, we're stuck down in this lower end of the range. Now, if we start taking out these pivotal lows, then I think all bets are off. And then I really think that the U.S. markets will get spooked by it. Remember, guys, we're not the only ones. So this is a worldwide economy now that we're all living in. And I just think that the U.S. markets are obviously manipulated and propped up to the best way possible. Yes, we are the best market, and we are recovering. There's no question about it. But I don't think that where we are, where price is in the markets, where this economy is now, should be warranted. But again, that's just my opinion. Nothing really to trade off of. Okay, take a look at the bonds. As you can see here, I gave you the bonds because this is a weekly chart. Today's Friday. I mean, something really extraordinary has to happen for bonds to really start breaking down. But this is a good sign for equities that we do have a break lower of this head and shoulders pattern. Now, we could really flush today hard where this thing would really come back up to this line and test it. So only time will tell. We'll see what happens at the end of the day today. But again, guys, it's a weekly chart. So as of right now, it looks like we do have pretty much of a trigger on this head and shoulders pattern. I think is that the market will probably come back up again and create bigger symmetry for this left shoulder like we do with the right shoulder. Get back above it and kind of chop around here. Get that one sell-off that we're looking for in equities, and then bonds will probably break down to the latter part of this year, 2013. Okay, take a look at the VIX. VIX, we did get that black candle. We did break outside of the Bollinger Band. We came back in, giving us now a buy signal in equities. Today will be a confirmation day. If we continue to break lower, that's going to put a bid into equities, and VIX should move lower. Equities should move higher going into next week. Okay, and this is just one area. I like looking at the tick. I like looking at the vol span, which is the volume spread, up-down volume. And all of those three things really give you a good incentive of what the market's doing intraday. That's what I like looking for. But at the end of the day, we do have right now a buy signal that's not confirmed. We're going to see what happens today at the end of the day. Now let's go into the charts. Again, 1635 here is still holding in. But you see what happened. Look what happened this week. Sold off, and we have inside day, inside day. We popped higher. We reversed inside day. From previous day, we did open up and we did close a little higher, and then all of a sudden, boom. Now today, if we open, we'll open down much lower, but we're going to be stuck above the 20-day moving average. So really, nothing has happened other than last Wednesday's move lower, then the follow-through on Friday with the short covering rally and the big pop up again. So very quiet, very choppy price action in the marketplace. Spiders, again, a nice big symmetrical triangle at the upper end of the range, which could tell me that we can either continue or actually we can break lower. It really doesn't give you an idea of where we're going, but we do have a symmetrical triangle, and we can see volatility, as you can see, picking up here. We have larger moves, and now we're getting into this tighter triangle, so we could break one way or the other. Break of either direction, market should continue in the spider. Same thing with the diamonds. But I'll show. Oh, sorry about that. This is the S&P 30-minute chart. Just want to show you that the energy is building. Look how choppy this is. It's not even great volatility because any of these moves have been really quiet. We popped up and the market just kind of drifted lower. Stocks really haven't moved that much. If the stocks moved, they moved first thing in the morning. They either gapped up, gapped down, and pretty much stayed sideways most of the day, or had a slow drift higher and or lower. So markets have been pretty quiet this week. But again, it is coming off of a holiday week to be expected. Okay, now let's take a look at the diamonds. Really pretty much the same thing as you can see here, but holding this long-term uptrend line, holding above the 20-day. So, guys, nothing really happened here. Still bullish, still constructive to the upside. And, of course, the transports. Now, this is what I've seen here. Now, we have a head and shoulders pattern here on the upper end of the range. Neckline's going to come in at 112.35. I put that here for you guys. Keep an eye on it because if this does break lower, which is our leader, it's going to take all the other markets down lower. The only thing is we did have one here. If you remember, I had a head and shoulders pattern and we did not break. And this was the a neckline previous at 104.20. We had the head, left shoulder, and right shoulder. You could see the bump here, here, and here, and that did not happen, and we just kind of drifted higher. So is this going to happen here, or is this just going to be a continuation pattern much higher? We don't know. All we do know is like identify the pattern, and once the market does trigger, right, we need that trigger on the 112.35. If we trigger, then we would break lower, more than likely catch the 50 back test. And that's when I like to create that. When the markets do break this head and shoulders pattern, what it usually does is creates a flagpole, a bear flag into this area, and then fail. And really, that's going to be your main confirmation. So there's a lot more work to do for this area to really hold. But this is something that's bearish, has not yet triggered, but there's something definitely to keep an eye on the transports during the course of the trading day. Okay? And here's the IWMs. Not much of a pattern, just a very choppy, as you can see, price action here. So again, telling us that volatility is picking up, okay? And we're just going to need to see what happens. A break below the 20 and hold probably would give us some further downside. And Goldman Sachs really on fire here. I mean, really crazy price action. Nice big move out of that bull flag that we mentioned earlier. Came back up, reversed, came back up again, retested that 20-day moving average, and then literally just kind of crept up here. Now, the 8-day is just kind of hugging this thing all the way. And again, lower yields, lower bond prices, higher yields is gonna help the banks, and that's why these banks are rising. XLF, same thing, back inside this trend line, this uptrend channel ever so slightly. So we'll see what happens up in here with the XLF. And Apple doing well, had a nice big day at the end of the day yesterday, holding this area here. And then again, this little head and shoulders pattern really working out well. Now again, guys, remember the neckline is going to come in right up in here at this 470 area. And I do think that this is still a day trading stock. I would not really, me personally, wouldn't be looking to accumulate this stock yet. I think you're going to see lower prices at least one more time. Okay, maybe not at here at 380. But again, we do have this head and shoulders, and we have this inverted head and shoulders. We have mixed signals at the bottom end of the range. We'll see what happens. Usually the inverted head and shoulders would work out at this lower end of the range. But again, looking constructive here. But if we fail 450-ish and we start to roll back over and we do fail, then I think Apple will be done for a while to the upside and probably end up moving a little bit lower again. And lastly is the Qs. As you can see here, same thing, a lot of volatility. Markets, as you notice, you see when we just keep creeping up every day, no volatility. Markets are starting to pick up volatility, which is good for us day traders, and then we'll just kind of see what happens. We'll take it one step at a time here. All right, guys, have a great weekend. Very, very hot on the East Coast. I'm here in 90, 92 degrees Saturday, Sunday, and today's going to be, again, about 90 degrees. So, summer is here, and we're going to have the summer doldrums. Remember, on Fridays, I would be looking to make a couple of bucks in the morning, right around 11:30, 12 o'clock. If you made some money, shut the computer off, go play golf. You're better off that way than sitting in front of a computer all day on a Friday. All right, guys, have a great day. We'll speak to you on Monday.